All right, good morning, everybody. It is Friday, January 21st, 2022, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. I was not here yesterday, so we did not really have a pre-market and did not really trade. But just looking at the market here, it just seemed like, exactly what we probably would have been expecting, because it looks like basically the last 3 mornings in a row, it's been the exact same picture. Right? We come in, the overnight low has a pretty good bullish argument. There's some kind of follow through, 10, 20, 30 points off of that signal, and then the bears jump in when they try to break out past the previous highs and just continue to chug it lower. So looks like yesterday was just a continuation of the last 2 days, which brings us all the way down here to 44.30 on the charts. And you can see again, somewhat of a decent bullish divergence down from the overnight low. We got a decent 40-point rally here in the overnight session from the lows. And a little over 40 points. Now you can see the bears jump back in, have a bearish divergence off the overnight high, and now we're retracing this leg up. So let's jump up and we'll do a full analysis here. I think it's pretty much the same exact picture as yesterday, the day before that, and Tuesday. So let's go ahead. I'll bring up the ultra high time frames. We'll sweep through those real quick and then see if we have anything else. I think the picture is pretty clear. So let's just see. We already talked about quarterly. We talked about monthly. We talked about weekly, daily, and weekly, and we talked about all the bearish stuff up top, and now we're getting the follow through. And you can see from this leg, all the way back from those October lows, pushing all the way to the all-time highs just a few weeks ago here. We're now retracing almost the entire thing. And what we were saying back when the chart looked like this, we only saw the bottom candle around 45.17. We said if it continues to correct, we've got the 61.8 retracement lining up with that previous resistance in the market. Excuse me. And then just below that, we have this major swing high, probably closer to around that 70% retracement level down around 44.12 and that swing high. So look what's happened so far. We've sold off and come down right in front of the 61.8 so far. There's probably more downside here. So wouldn't be surprising if we're testing that swing high at 44. Let me get the number there. 44.14 quarter within a few minutes of the open if the bears are going to continue to be strong. And there was one other interesting little observation here. In our study group yesterday, we focused in on just the basic concept of Fibonacci, how I use Fibonacci, what levels I tend to rely on, and then how you can use it for price forecasting. So this is absolutely perfect because if you take a look at the whole push down and we go back here to the sell-off from the all-time high, we sold off and we actually drew a fib on here back, probably I would say back at probably the first, just after the first week of January there. So we had this fib up here, and anybody who's been following the channel, anyone who's been in the room here, remembers we talked about this little shaded zone up above by 47.44 to 47.50ish, somewhere up in that region, being around that 75% retrace of the whole leg down here. We talked about this being that first level we needed to get through if we're going to have any confidence in the bulls. And then you guys remember we came up, we got just in front of the shaded region, and then the market started failing. From there, we had this fib extension down. So remember yesterday in the study session, we were talking about using extensions as potential targets to the downside and forecasting that if the market's going to hold at the 38, 50, 61, or 75% area, and it's going to get follow through from there, typically we're going to see some type of reaction down at one of these three levels. There's no guarantee on that. It's just a good general rule. If you're looking to take profit, you're short from all the way up here, these would be some safe areas to take profit in front of. So let's just take a look at what ended up happening here. First of all, we came down to the 27, again, just in front of it, and bounced out a few days ago, All right, we sold off, and now in the overnight session of last night, we came down almost to the tick to the 61.8, and then got, what did we say, this 40-point bounce in the overnight session. So literally almost to the tick at the 27 and almost to the tick at the 61.8 extension, and we had these numbers all the way back at basically the second week of January, beginning of that week, right? So this is just a beautiful example of literally holding things right at these levels. So just wanted to spend a second on that because I think that's a great illustration. Just like we had the projection over here on this leg here from the lows of December all the way to the highs here at the end of mid-December, we had the 27 extension up here at 48.13. Well, what was the all-time high? 48.08. So we came right up in front of it and failed. Right, so that's why we like using fibs in this, at least in my strategy. They typically work pretty well. So spent a little bit of extra time focusing on that, so I'm gonna rush through some of this other stuff. Everything else looks obviously very bearish. There's a potential that they could chug right out of the overnight low here because we do have a good confluence of some bullish signals on the 4-hour, the hourly, and then down into the shorter and the intermediate time frames. So there's always the potential that the bulls find some type of follow through, and we see those attempts here as we sell off. There's always these rallies, but then they get smacked down. So the question this morning is, are the bulls going to hold this overnight low and get some type of follow through? I feel like I'm repeating myself because literally for 2 or 3 days it's been the same thing. We need to see if the bulls are going to have enough strength to kind of follow through to the upside here. And if they do start to gain some strength and they hold the overnight low, there is potential. There's still resistance around 96, 97. We've got the swing low from yesterday's market lining up with 50% of the previous day. That's another critical level to get through. And there might be, more so of a range here somewhere around the magenta line and that swing low from yesterday, and then these swing lows here up by our eye level at 27. So that's just to start out. If the bulls really start ripping here, they get through our first power level there, that orange line, they get through the overnight high, they get through 96 and this 45.27 and 45.15 area, then maybe we can consider some more follow through. Remember that the retracement for the whole leg down from yesterday's high to the overnight low, 61.8, is sitting right there. So if we can get through that, that would be kind of our first little clue that maybe we could have some faith in the bulls. Of course, remember, there's just about that 75 retrace area, and then we have to get through the previous daily high. So there's still a lot of contention up above. Down below here, and the thing is it's a really long time since we were down at those levels where we're pushing into right now. So we kind of have to go all the way back. And our overnight low, let me get the number so we can scroll back and look at that area. Our overnight low was 44.2950. So let's go all the way back to when we were playing around at that part of the chart. So 44.2950, right down over here. So everything up above that we've already mapped out, and we have everything else mapped out from our eye levels. But I want to come back here and look at what we're pushing into now, right? So 44.29 we said was the high, so we've already gotten through all this stuff up top here, and now we're pulling back into this little section of the chart down here. And to be perfectly honest with you, I think the major eye levels are essentially outlining all the interesting areas that we want to pay attention to. And that's kind of the point of the major levels, is really outlining the extreme highs and lows of the major chop areas. And there's always going to be a little bit of some overlap. Some people might argue that major level should be at 1450 there because you have a lot more of the swing lows and the swing. There might even be a good argument for a minor level sitting right there, and we might have that on the short time frames. But for the most part, it outlines a lot of these areas. So if we get through 44.2950, which is just right around this area, and look at where 2950 is. I want you guys to take a look at this because this is really helpful. So 44.29 quarter, I guess, right there. Let me see if I can draw this all the way across. And I'm going to make this like yellow. So we have a really clear view of this because this is very interesting. So the overnight low, 44.29.50. Let's look at what happened in the past here. Really strong bounce right out of that area back in October. We came up and had trouble in the overnight session a few days before right there. And then if we scroll back there, I think there were some pretty, yeah, right off the level there, right off the level there. Okay, and then let's go back a little bit further. And look at that, a breakthrough, pull back right to the level and a push out. And then even all the way back here was resistance all throughout this area of the chart and then became support a few times. So that's where we, and I don't know if it extends, that's where we bounced this morning. So you guys need to really, really look into this stuff. It's like magic. So let's go back and see what we got below us. We've got about 10 minutes until the open, so I'm going to kind of take my time here. And let's see here, that's kind of our dividing line, right? That's where we are now. And everything below us here has not been tested since October. So as we pull back, I think that 15 area looks beautiful. And remember the swing high of that, go all the way back. This swing high, it's going to take too long. But there's a swing high there as well at 44.15 quarter. And let me just bring it up. So this ledge right here. So that major swing high there that we never came back to test at all, that's that 15 quarter. So if we continue to break lower through 29, that 15 quarter level is, in my opinion, a potential area for support. It's been a really good resistance and support level going into the past here. So we've got 15 below us. We've got 43.98, another 15, 16, 17 points down. And if they get through that area, there might be some minor levels in between on our shorter time frames, like 43.74 here, maybe 43.82. But then we're all the way down to 43.61 and 43.24. Those are the major levels I'm watching this morning if we continue to sell off. And then if they continue to get through all this, it's just opening up 24.50. This major area right around 43.13.75, 43.14 might be a minor level on our short time frame charts right around there. And then if we get through that, we've got basically 42.90 and then 42.62. And you know, anything's possible here. We could be another 200 points lower for all we know, right? And if we look at the extension of the current leg that we're in, kind of like what we were talking about when we did our extension all the way back here and got our projection for 29 and for the low of yesterday. If I recall that low correctly, something over here. If we look at the extension of the most recent leg and we look at where that extends out to, it's bringing us right into that eye level down there at 24.50. We've got the 27 extension at about 84, and then the 100 is exactly basically that these two eye levels are lining up perfectly with the ratios based off this leg. So I like the fact that that's set up like that. So that's what we have to the downside. Again, to the upside, we have everything pretty much there. The major low from yesterday, the overnight low, will be important. And then we do have some levels in between there. You know, that 96 and the overnight high just around 44. Let's get the actual number, 44.67. Wait, that doesn't sound right. 44.77.75. So 78, 96 to 97, the swing low from yesterday, the magenta line, and then kind of this general area right between the magenta line and that 45.81.50. If they get through there, like I said, we've got an eye level and the high from yesterday to get through, and then it's going to be just a bunch of contention as the bulls push. Remember though, when we have a really strong move with really very high momentum, all these levels above us become kind of not even important anymore, and we can see the bulls just kind of rip through a lot of this stuff. So if that starts to happen, we'll flip our hats, we'll start looking for longs. But right now, I'm a little bit more interested in trying to parry a little short off of the back end of some of these levels. Again, if the bulls are really strong, we might end up finding a nice scalp entry, and it might run for a little bit to the upside, and that's always a possibility too. but right now things still looking pretty heavy here. And you know, I was in a meeting last night with about 12 other traders. I run a Las Vegas trading meetup, and actually one of the guys that I've learned a lot from, who lives here in Vegas, he's saying he expects at least a 20% pullback in the markets. And if you step back and you look at the whole picture here, I mean, we're due for some type of healthy correction, right? The market, you know, breathes in, pulls back, breathes out, gets a push. Breathes in, pulls back, gets a push. We've been pushing now for like almost 2 years straight with really no breathing, no in breath to recharge and continue going. So in my opinion, it really does look like we need that in breath and that little retracement of the current major push to kind of recharge, get that breath in us, and then get that out breath back up. Remember, we said up here from a 3-month perspective, there's still no sign of exhaustion from divergence. So over here, and I'm spending a little bit more time than I really need to, but if you look over here, we had this push up in price, the RVI came down, and then after that, that was that little hiccup or correction in the market there. Same thing up here, we had the push up from this high up into basically that candle, and then they peaked a little bit above and failed, and we had another bearish divergence there. And then just before the COVID correction back in February of 2020, and it's still not allowing me to, maybe I have to hit control. It's not allowing me to move this right and left, and there's probably some scroll lock thing or something here. But if you go back here again, we got this nice major push up going into the beginning of February of 2020. And if you look at the RVI, as we were pushing higher, the RVI was pushing lower. And I wish I could cut off the right hand side so all we could see is these candles, because there was a little hint in the RVI that there was going to be some type of hiccup or pullback. And that was before and that's why I say a lot of times it seems like the technicals almost lead, even if there's some type of fundamental thing in the market or fundamental thing going on in the world. There always seems to be a technical that leads before the actual move happens. So that happened back at the 2020, and here we are right now on the chart, and there's absolutely no sign of divergence in any way, no matter what you compare the current peak to. We're at the highest highs we've had on price and the highest highs we have on RVI. So I still think the market is strong from this higher time frame perspective, but once we get down to the monthly, the weekly, and the daily, there's plenty of signs for a pullback, and we're getting it, right? So this might be the beginning of some type of correction in this leg right here. But I'm still bullish overall because this time frame is telling me we have more to play up here. We might actually have something where there's some type of pullback, and it might just be where we are now, and then they come back up and they test the high and they play around, and then maybe this RVI slowly over time develops some type of divergence where it doesn't get high enough on RVI, but the price is pushing higher. And then maybe from this quarterly perspective, there's a hint in the market that there's going to be a pullback, and then we get some major correction, right? Because this 3-month typically leads to some of the biggest pullbacks we see in the market. And again, I don't see that right now. So again, the expectation is for a pullback, but overall, I think that we might be, going back up to test the highs, and if not, go ahead and continue to chug. So we'll leave it at that for this morning. We'll jump down to our short time frames, go back to our members section, and start looking for some trades coming out of the open. And look at that beautiful rejection here off our VWAP. Have a great one, guys.